This is Basket Case Clubs, CPR Group's podcast where we turn basket case clubs into showcase clubs. Hello everyone and welcome back to Basket Case Clubs for our first episode of the new year 2024. Today is the 3rd of January 2024, so the ringing of fireworks is not too far from our ears, and it is our great pleasure to be, well, it's my great pleasure to be hosting you and my wonderful brother and partner in Basket Casey Goodness, Steve, on this Basket Casey journey. Happy New Year, Steve.
Happy New Year. I'm so excited that we can stop writing 3 every time we write the date. I remember having this discussion with you at the start of 2023 and lamenting how much we hate writing that. My 3s are never the same. Yeah, my 3s are never the same, man.
And sometimes it just looks like a back to front C. Like, how did that happen? It's funny. I don't remember whinging. I remember whinging about it a lot, but I don't specifically remember whinging about a 3.
Yes.
Funny that you should start talking numbers, Steve, because our next little mini series as we launch into for this year is all about money. And it's funny how often I say that this is one of my favorite topics because it probably makes me sound like Scrooge McDuck. I love money.
It's a topic that often attracts some pretty interesting discussion in the not-for-profit world as well. Yep. And that's probably why you like it. It's certainly why I like it. And it's an opportunity for us when we talk money in the not-for-profit sector to dispel a lot of myths that just get handed from one committee to the next and from one volunteer to the next. So I'm really looking forward to doing just that through this mini-series and getting to spend more time listening to you and your very coherent ramblings. Now our listeners are thinking, what does Steve want?
Yeah.
Money.
Yeah, maybe. But I'm now just thinking, does that mean I do most of the talking here? And then I'm thinking, well, I kind of know me, and I'd probably, it wouldn't surprise me.
You're the host, man. I'm just the sidekick. Yeah, I'm just coming for the journey. I'm along for the ride.
How long have we been doing this? Since 2020. So we're rolling into year 4 now, and it's taken us that long for us to admit that you're the sidekick and I'm the host.
I've been admitting it for much longer than just now. Well, don't you worry. Yeah.
But don't I say something like that at the start of every single freaking episode? Like, it's my pleasure to host you. So, yeah, that's funny. All right. Does that mean you have to do what I say? Can you go and get me another cup of tea, please? This one's gone cold.
No, I will retrieve whiskey, not tea.
Yeah. It's probably a bit early in the day for whiskey. Certainly too early in the year for whiskey.
Yes.
So before the break, we were running a little promo for people to leave some reviews on whatever your podcast listening platform of pleasure is. Platform of pleasure. That really sounds like a bed, doesn't it? Oh, so don't leave a review on your bed, please. Leave it on Spotify or Apple Podcasts or Google Store, wherever you listen to your podcasts. And we do have a winner. We do have a Brit. I think it was Brit123. So congratulations on winning some fantastic Basket Case merchandise. In fact, it's the same one as I've got my little coffee cup here.
Oh, drinking your empty cup of tea.
A cold cup of tea. Oh, yeah, I think I need a new one. But anyway, look, it reminds me of why we do that. We don't, like, despite the fact that I've probably got a fairly big ego, it's not why we want reviews. They're not there for us. They're there to help people who are looking for good podcasts and who are looking for good information about and the sort of stuff that we're talking about. So if you are the sort of kind-hearted, and listen, I know you are. You're a wonderful person because you've spent time listening to us, very coherent ramblings, as Steve said, talking about all things that make clubs funny and bad and trying to turn them into good clubs and give you the tips and tricks so that you can avoid the pitfalls that we've seen for the last 26 and a half years now of clubs doing some often funny and often just really stupid things that shouldn't be done. And there's a lot of that comes up when we talk about money. So if you've got, what is it going to take you? Probably 47 seconds to go and leave us a review. I would certainly we would be eternally indebted to you for doing that. Doesn't mean we're going to actually give you money, like you're not actually a debt or for us. So
nice ass covering there, Nick. Yeah, well done.
Well, no.
But we might give you some merch. We might give you some merch.
Yes. It's only because we're talking about financial terminology in this episode that I thought, well, let's actually talk about debtors, but we won't jump the gun yet. We'll get to debts when we get to debts. So I'd like to start, Steve, because we're going to be talking about definitions, in defining probably one of the most stupid terms in the universe: not for profit. Not for profit. It sounds like we're not allowed to make a profit. Now, this is one of those things, and as you were saying, that we like talking about this topic. One of the reasons that I like talking about it is that we keep learning new things. And one of the episodes we're talking about here is about taxation. Listen to me get excited about freaking tax. It's about taxation. But the thing is that new people are coming into committees all the time. And so they don't necessarily bring any skills. And a lot of them, this will be the first time that they've had to read financial statements or think about things beyond their own personal tax return. And so we often find ourselves teaching the same thing year on year. And that's fine, so long as we're teaching it to new people, so long as it's new people that we're teaching it to. Because if you're just doing things year after year and not learning, that ain't good.
It's funny though that does happen, and we do get to meet the same people. Sometimes not necessarily only 12 months later, but sometime down the track. And because the day-to-day busyness of running their club has once again consumed all of their time since the last time we spoke, or had the opportunity to work with them directly, or presented to them at some workshop at which they were an attendee amongst many others, that some of the light bulb moments that experienced during that discussion or presentation have left them, and they'll say, "Oh shit, that's right."
Yeah. Oh, that's right. How often do you hear that? Oh, that's right.
Yep.
You told us that last time.
Exactly. And I think that highlights the importance of regular inductions for board and committee members. So we advocate that should happen after every AGM, even for those people who've been re-elected, or the people who didn't have to run again because they've got multiple year terms in office. You do inevitably, in a volunteer role, many times get distracted by the urgent stuff, and the important stuff goes by the wayside.
Yeah.
So, and often we also experience the influence that culture or the member sentiment in a club can have on the decision makers. So the board or committee members who we will hear in a board meeting saying, "Oh, we can't put the prices up in the bar, or we can't increase our membership fees because we might lose members or we might piss people off. And we're not for profit," which
we're not for profit, by the way.
Yeah, we're not for profit. That's right. We don't exist to make a profit. So that is absolutely one of the biggest myths, isn't it, that we dispel in our work with volunteers.
It's so funny. Every time I talk about Ethan a lot, and but mainly because he's regularly at the dinner table at the same time as me. And it's so funny. He walked in one day when I was either listening back to a video recording that I'd done, or he was there as I was doing the recording. And he heard me say, "Not for profit is very different to no profit." And he says it all the bloody time. And it's so funny. So, Steve, if not for profit is very different from no profit, what does not for profit actually mean?
Not for profit means only one thing, and that is that a not-for-profit organisation cannot distribute any profits that it makes to its members. It absolutely can make profit, and as we advocate strongly, really must strive to make a profit. Because if you don't make a profit, you're doing one of two things. You're breaking even or you're losing money. And I'm no economist, but even I know that there's a limit to the number of years in a row that you can break even or lose money before you run out.
Yep. So to finish off what you said, I can't. The not-for-profit means you can't distribute any surplus assets among members. as if you were paying dividends to shareholders. So you certainly can pay members if they've incurred an expense on behalf of the club and you've got to reimburse them. Absolutely. If they're an employee of the club, and so long as there's no conflicts of interest going on there, and you need to pay them for that, absolutely, you can give them money. But you're not sharing the profits as if that's part of your expenses. Then that's not distributing the profits.
Yep.
So what that means is the flip side of that means, well, where does the profit go? And the profit goes back into delivering on the purpose of the organisation. Charity or not, what is the purpose? And that purpose for sports clubs is going to be to promote the sport of, enter sport name here, and provide facilities for blah, 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 or anything else that is in the Constitution. And when we talk about objects, that's the most important one, because that's why you exist. And that is then where the profit goes. The profit doesn't go to members. So it'd be great if we could go back in time and change this definition, just because it gives people, it's the nomenclature gives people a bad idea. If we could say it's not for the individual profit sharing among of members by way of distribution of so it's not going to work. So we're stuck with not-for-profit. We're not going to be able to go back in time and change it. But it's really important that as a foundation of financial management for not-for-profits, that you understand what not-for-profit actually means.
And importantly, it applies during the life of the not-for-profit club, association, whatever, but it also applies upon winding up. So if your members decide this, the ship has sailed, it's time to shut down our club, and at that time the club has surplus assets, those surplus assets, and your constitution will spell this out, must not be distributed amongst your members as if they were shareholders and, receiving some profit distribution. But typically speaking, that money will need, or those surplus assets, whether it be money or plant equipment and so on, will need to go to some other not-for-profit. Now, if you're a charity, then the money will need to go to another charity. But importantly, that those surplus assets cannot be distributed amongst members upon wind up either.
Yep.
So it's not a loophole. Oh, we can't distribute money amongst members while we're operating. Well, we're going to shut this show down and we're going to give ourselves some money. Can't do it.
No, ain't going to work. So just on a little clarification, but we won't get into the weeds on this one, but we've mentioned charities twice now, I think, and Jess, our wonderful producer and editor, can tell us if I'm wrong there. And Jess, if I'm wrong, then you can just insert a little robot voice that says 3 times or 6 times or however many it is, I don't know. But interestingly, sport is not a charitable purpose in Australia. So sports clubs ain't going to be charities. There are exceptions there where we've got some organisations that deliver sport as therapy for people with disabilities. Surf lifesaving clubs are exempted from that, but it's not because of the surf sports arm, it's because of the lifesaving. So they provide a service to the general public. So they're for public benefit. So that's an important one, that because quite often we'll have that discussion with people in clubs saying, oh, let's become a charity because we'll get more grants. It ain't going to happen. So you're not going to become a charity because sport is not a charitable purpose. So if there's an act of a change of the act and that happens, fine. But for now, let's just, but I wanted to get that in there because it's something that we talk about a lot. So another thing that that I like to trick people on, actually, this is kind of a trick question, is the accountability for financial management. So who's accountable for the financial management of your club? And people go, oh, this one, it's the treasurer. And, that's the answer I'm looking for, but it's a trick question. And the trick is in the way that I asked it. I didn't say whose job is it to do financial management. If you want to pause and rewind the podcast for a minute, you can go and have a listen to what I did say. Accountable is the word that I used there. So it is the entire committee that is accountable for the financial management of your club, not the treasurer. So while you might delegate responsibility to the treasurer for doing the financial management, so for doing the bookkeeping, issuing receipts and invoices, it's everyone on the committee's job to look after good financial management for your club. And you've got to get that right.
You do. And the eye-opening moment that I often point many people to in this discussion is, this is exactly why your treasurer presents a monthly, a report to the rest of your board or committee at each of your regular board or committee meetings. Yeah. That's right. Yeah. And I also say, and I'm interested in your take on this, there's no good reason that every accountable person, i.e. management committee member, shouldn't have at least read-only access to the organisation's bank accounts and financial management software.
Yep. I would absolutely agree. Now, the reason I agree is actually have a look at what we mean by accountable, because it's all very well and good for me to throw that word around, but what do we mean by accountable? And if you want a better way to understand accountability, then I've got two little mental shortcuts that you can use. The first one is the difference between accountability and responsibility. And the way to remember that is you can delegate responsibility for doing financial management or for anything. So in this case, doing financial management is delegated to the treasurer, but you can't delegate accountability. And the second one is to just remember that accountability starts with starts with the letter A, as does answerable. So you, by being accountable, you are answerable for the financial management of the club. So, okay, to whom are you answerable? You mentioned presenting financial statements to the committee or board meeting, each meeting, fine. But you're also accountable to members, and so you do the big financial reporting of the financial statements at the end of the year or after the end of the year at the AGM. But you're also answerable to any reporting agency. So for incorporated associations, that's a consumer affairs department in your state or territory, because that is where you need to send your financial statements. If for those groups that are charities, then it's the ACNC, the Australian Charities and Not-for-Profits Commission. It's to council if you've got a lease. It's to grant agencies if you get any grants. So that's what accountable means. You are answerable to those people. So by being accountable, you need to have the answers to the questions that they might ask. There you go. We should put that in a dictionary somewhere. I think we've just nailed it.
I'm trying to come up with a good name for a dictionary that is some amalgam of Michael, Steve, basket case clubs. I'm going to keep that under review and get back to you on it.
Yeah, and
the Moxford Dictionary.
Probably best that you not try saying something for the first time live on a podcast, because you might accidentally say something that I regret. Right, so that kind of gives you a foundation of financial management and what we're talking about. So not for profit doesn't mean you can't make profit. In fact, profit is where growth lives. So definitely make a profit. In one of these episodes, we'll talk about ways that you can make more money, yet still maintain all of your maintain your not-for-profit status.
And can I just quickly point to a couple of practicalities? Every club with which we work wants to do stuff. They want to improve their services. They want to build better shit. You can't do any of that without money. So keep in mind as a decision maker.
Oh, but you can get grants, Steve.
Oh, no. You can get
grants.
There are
so many grants out there. There are grants for everything if you just know where to look. Yeah, but grants aren't going to make you money. Grants are for projects. So even if you do get a grant for what is it you want to build or buy, new tractor, new mower, new shed, new clubhouse, new fields, new lighting, you're going to have skin in the game in this. You're
going to have to maintain it, and you're going to have to replace it when it gets to the end of its useful life, which will come.
Yep.
So
yep.
So keep all these things in mind. And the other mindset trigger that I often point volunteers to is you deliver a great service. You are obviously passionate about the service that your club or association delivers because you stuck your hand up to be on the board or committee. You can only deliver that service if you've got money to do so. In most cases, certainly in the world of sport, I think it's a universal reality that that's the case.
Yep.
So recognize that you are running a business and you need to trade profitably so that you can continue to deliver those great services.
Yep.
Indefinitely into the future.
Yep. All right. So nice foundation. Let's now get into increasing this foundation by talking through some terms that we use only really when we're talking about money. So there's a handful of these, and then we'll pull up stumps and we'll come back and talk about some of the other aspects of financial management in upcoming episodes. But let's start with the ABN. So an ABN is an Australian business number. Now, it's not an ABN number, is it?
Just like it's not a PIN number.
Or a BAS statement. Now we're talking there about the RAS syndrome, redundant acronym syndrome. So you finish your BAS statement, then go and put your PIN number into the ATM machine. See what I'm doing there? Oh, yeah. Look, it's one of those things.
Too many TLA acronyms.
Yeah. 3-letter acronym, maybe. Yep. Well done. Right, the ABN, let's get back to it. The ABN is, if you like, it's just a number that says we are an entity that is carrying on some form of business in Australia. Australian business number. That's it. So I kind of think about it as a barcode. It says, yes, We, as a club, are an entity that is carrying on a business. Oh, but we're not in business. We're a not-for-profit. Yes, you are in business. You sell things. Oh no, well, yeah, but they get for free from it. Yeah, you're selling membership.
Yep.
So you're selling membership, and you, in this case, you're providing a service. So that's it. So there's by this stage, given that the Goods and Services Tax Act, where the ABN was introduced, came in 2000, there's no reason why clubs shouldn't have an ABN. There are some very small clubs that still don't, but they're typically organisations that are trading within another organisation. So if you've got a sports and community club, for instance, so that has a bar and gaming and dining areas in this club, and you're a fishing club that is part of that, then you're really not a separate club if you're only operating within the parameters of that larger organization. So in those cases, those little clubs that, and typically they won't even be separately incorporated, those sorts of organizations, and there I'm using the word organization to mean that there are a group of people with a common interest who organize some shit and do some shit together. That's a big difference from that is a lot different to an incorporated association as an organization which has a legal structure and is an entity in its own right. So those are the only cases nowadays, and small student clubs are another example where they still don't have their own ABN. But anyone who's incorporated, and anyone, definitely if you're receiving a grant, you'll have an ABN anyway. But the ABN shouldn't be confused with the GST, the next TLA on the list. The GST is a tax. So yes, to be able to be registered for the goods and services tax, you need to have an ABN. But you don't need to register for the goods and services tax just because you have an ABN. So the ABN is just there. It doesn't cost anything. It's set and forget. Once it's set up, that's it, unless you need to change anything because of something like a name change. That's it. It won't need to change. It just exists and that's it. But your registration for GST might change based on your turnover, because any business that collects money and that money goes above the registration threshold, and this is what made me laugh back in 1999 and 2000, that organization becomes a tax collector. So if you are carrying on a business and you, as a for-profit business, earn more than at the moment $75,000, then you must register for GST, which means that you must then charge GST on everything that you supply, on any products or any goods or services that you supply.
Well, it means you've got to give 1/11 of all of your income to the ATO as GST. Whether you increase your prices or not is an interesting discussion. And I have spoken with clubs in the past who've become aware that their turnover will exceed, in the not-for-profit sector, the threshold, which is
double. So it's 150. And it's always been double, because it started as 50 and not-for-profits were 100. Now it's 75 for for-profit, 150 for not-for-profit.
Yep. So they became aware that they were going to exceed that GST threshold of 150K as a not-for-profit. And they said, oh, we couldn't possibly put our prices up 10%. We might upset our members. So we're going to put them up 5%. So I said, hold on. Where's the other 5% coming from? And they said, oh, well, I think we'll be able to weather that. So that is exactly the sort of mindset that we were pointing to earlier, which is indicative of kind of, roadblock, self-limiting thinking.
Look, it's just not thinking that this is a business. And so when for that organisation, Steve, if you can go back to them and say, are you on the ABR, the Australian Business Register? Yeah. And so I can go there and see your ABN. Yeah. Do you know what the B in ABN stands for? Yeah. No, it's not an ACN. It's not an Australian club number, because an ACN is actually an Australian company number.
Yep. So anyway. I've been interestingly experiencing less, or been exposed to less confusion between the ABN and the GST in the last probably 5 years than in the years between 2000 and that. Okay. In that, there was a little more pushback from clubs that would say, oh no, we don't need an ABN because we don't turn over enough money, or because we're just not for profit. Whereas now there appears to be a better grasp on that across the not-for-profit sector. Would you agree with that?
Yeah, I don't. I'd have to give it some probably a bit more structured thought to give you a time frame. But definitely, yeah, it was. And remembering back to 2000, it was a shit show. But look, it was a shit show.
It started at the started at the top. Yep. Was it a bit of birthday cake?
Yeah. I wonder if that clip what is it, Mike Willisy? I wonder.
John Hewson. Oh yeah,
Yeah. I wonder if that's on YouTube somewhere. We should dig it out. That was piss funny. So
it
there's a
was
birthday cake, and like he just, like was
dying a
it
slow
Willisy?
and painful death.
And he's just gone, this is gold.
Yeah.
Just watching the whole thing unravel before his eyes. He goes, like as a journo, he's just gone, oh my God, I'm going to get what's the Australian version of an Emmy called? Logie. I'm going to get a Logie for this. A Lamey award. I shouldn't say that because I might want to get one day. Do they do Logies for podcasts? No, they don't.
John Hughes. Yeah.
It's there.
It's YouTubeable, baby.
Okay.
Yep. There you go.
All right.
The GST interview.
Okay, nice. And was it Willisy?
It was Mike Willisy.
Perfect. Good. I'm glad that my memory's still functioning okay. Okay, so we're not done with our TLAs yet, Steve. I got one more for you.
Yes.
That's the BAS, the business activity statement. So if you're not registered for GST, you don't need to worry about a BAS. But if you are registered for GST because you've got your turnover that's gone over, or because you voluntarily registered for GST, then at some period you're going to need to submit a business activity statement. And most groups with ABNs that are GST registered submit their BASs, not BAS statements, on a quarterly basis. So the BAS reports your income and the tax that you've collected on that, so the goods and services tax that you've collected during the period. But it also gives you an opportunity to declare the money that you've spent in the GST that you've paid, because here's where it gets even funner, is you can claim input tax credits back for the GST that you've spent in buying the things that help you run your business. So if you're charging GST for your members to come and play at your club, but you're paying GST on things like line marking, paint, and fuel for your mowers, and chocolate bars for your canteen, then you can claim input tax credit back for that. We should probably stop there, because otherwise I'm going to get into how funny
rabbit warren. Yeah, it's funny. Yeah. It is funny.
You probably just need to go and watch that interview on YouTube, and that'll
recognizing that it's going to leave you more confused than you are right now.
Yeah. Yeah. So that's probably enough for the TLAs.
But I think your point, just quickly, your point that once an organisation registers for GST, they essentially become a tax collector. I think that's a really simple way for people to wrap their head around it. You're essentially collecting tax on behalf of the ATO, and then you're giving it to them.
Yep. And so so those clubs that you talked about that said, oh, people can't afford the additional 10%, when you get, and the thing that often puts clubs over the threshold, because they've been happily ticking along at $100,000, $120,000 a year, and that's been fine, and they haven't had to register for GST, it's often a grant that puts them over the limit. Because the grant itself is a taxable supply. We'll leave that one for when we do a grants mini-series, but the grant itself is a taxable supply. And so that's the bit that can put you over. And so then you've got to, because it doesn't just apply to the grant, it applies to everything. So you need to remit 1/11 of every money that you, as you said, every bit of money that you make to the ATO. Well, there's another TLA in the ATO, the Australian Taxation Office. Another term that I think is really important that clubs need to understand is solvency or solvent. Now, I'm not talking solvency here like a painter needs to use solvent to thin down the paint or get old paint off something. Solvency means your ability to pay your debts as and when they fall due. And so that's the kind of the full way that you've got to say it. Because it's not just the ability to pay your debts, it's the ability to pay your debts as and when they fall due. So to break that down a little bit, and we'll get into this when we're talking about the different types of assets, so current and non-current, in an upcoming episode. But you might have some bills that you've got to pay because you've got an electricity bill coming up, you've got your internet connection, you've got your lease fee, you've got your water fee, you've got your rates. So these are all known expenses that are coming up, and you need to be able to pay them, but pay them as and when they fall due. So if you know, and it's about the money in the bank or your liquidity, how much money you've got to be able to pay off your debts or pay your liabilities. If you know that your rates bill is going to be $5,000 and that rates bill is coming in October, I don't need to have $5,000 here in January to be able to pay that rates bill in October because it's not due yet. But it also deals with the fact that some debts are longer term. So that's a short-term debt. So you'll get your rates notice and it's probably going to be due within 45 days of when you get that notice. And you might have, for your electricity bill, you might have an early payment discount, for instance, but it's not actually due until the due date. But for some payments that you make. So if you've got a long-term loan, for instance, and this is certainly not uncommon for clubs to have a long-term loan, and indeed there are clubs now, because we've just had rain. Whoa, who'd have believed it? Who'd have thought that? Summer in Australia, we get flooding, we get rain, we get storms, we get disasters, we get bushfires. So often there's loans that are available. So loans available on a concessional interest basis, and the government's just released some information about that. But if you take out one of those loans, you've still got to be able to pay it back, but you're paying it back over time. So it's not, if you borrow for round figures $100,000, then you don't need to have $100,000 in the bank to be able to pay that off, because it's not due and payable yet. It's due and payable at the frequency that is set in the loan agreement. So it might be a monthly repayment of $1,000 a month or $1,800 a month, or however it's set for principal and interest. But if you default on one of those payments, or two of those payments, or whatever it says in the loan agreement, and then the whole lot becomes due and payable, then you do need to have the money. So and this is where the term insolvency is based as well, because insolvent means that you're not solvent, which means you are unable to pay your debts as and when they fall due. So insolvency is simply the opposite to solvency. So it's not a crime to be insolvent. It is just a problem to continue to trade while you are insolvent. And I'm not sure whether it's a criminal offence, but it is certainly an offence to trade while insolvent. And it can be an individual expense. So it can be, depending on where the legal structure, so where you're incorporated or if you're a company, if you incur a debt, so if you take on a new debt while you are technically insolvent, so that means you don't have the ability to pay that money back, then the protection that incorporation provides disappears, because you can be personally liable for that expense or for that debt if you take it on while you're insolvent. And so that's why it's really important to jump right back to almost the top, where we talked about accountability and how it's the entire committee's job to be accountable for financial management. This is one of those things that you've really got to be watching. So there's never too many questions that you can ask of the treasurer. And it always bugs me, that little bit, just a little alarm bell ringing in the back of my mind when I'm sitting through a committee meeting and the treasurer presents their report. They say, right, anyone got any questions? And nobody does. And you can always see the look of deflated disappointment in the treasurer's face, and they go, oh, but I was really prepared and I put a lot of work in. Ask questions. Because you, as a committee member, need to make sure that the club is solvent at all times. And so that's a great time to ask. And the treasurer's going to love it, because if the treasurer is well prepared, and the ones that we work with certainly are, then they're going to love a chance to answer a question for you.
Yeah. One other thing that came to mind as you were talking about the timing of when bills fall due is that it's important to acknowledge that some creditors will enter into payment plans with you, the ATO being a notable example, whereby if you owe the ATO a lot of money due to a tax bill, it's in their interests to enter into a payment plan with you, because that might mean that they get their money in the long run. Whereas if you, as an organisation,
declare bankruptcy,
then they're far less likely to get any of their money. It's certainly not all of it. So that's one, and the ATO not being the only potential creditor that might enter into a payment plan. This is not financial advice. Yeah, look, incur heaps of debt and then go and negotiate favourable payment terms with your creditors.
Oh my God.
This is not what I'm suggesting.
To all of our dear listeners, please don't take that last comment out of context.
Yes.
Use it as a sound bite.
Yeah. No, but the other really important thing that I wanted to point to, which is something that I do discuss with clubs somewhat regularly, is exactly as you said, when you get your rates notice and it says, here's what you owe us, but then it says if you pay early, you're going to get a bit of a discount. There's something in that for clubs. For those clubs that offer an early payment discount for membership fees, they might find that the number of members paying their fees in a timely manner could increase. Not always, but it's certainly something that I have seen implemented successfully in some organisations.
When we get to our episode that talks about making money, I think that that's going to be an important thing. And there's headroom, so there is room to move in pricing in sport. And if that means that you're going to increase your fees, but only actually charge that increase to anyone who pays late, then maybe it'll solve two problems: A, not having enough money, and B, having tardy payers.
And back to the payment plan discussion, acknowledging that you may well, as an organisation, provide services to people who are suffering genuine financial hardship. We've seen successfully implemented payment plans in clubs as well. And again, as long as people remain up to date with those payment plans, they can continue to receive your services, participate in your sport or whatever. And again, let's come back to that.
Yep. And look, here's something else that we're going to come back to, and it is income tax exemption. So we're going to do an episode on this because there are significant changes to income tax exemption reporting for incorporated associations, for not-for-profits in general in Australia. So one of the really good things about being a sports club in Australia is that although you won't get income tax exemption by way of you being a charity, as I mentioned before, in that sports clubs can't be charities, sports clubs are income tax, generally speaking, sports clubs are going to be income tax exempt because of the nature of their operations and the nature of them being not-for-profit. So that's fantastic. That means that when you're looking at your financial statements, you're not paying income tax on all of the money that you're making. So that's a massive win. That's like a 25 to 30% increase in your bottom line, simply because you're not losing that money to tax as if you were a company paying tax at the company rate. So what's important that is changing is that the fact that you now need to report on that to the ATO. But we'll come back and we'll revisit that in a bit more detail in an upcoming episode. The last one that I wanted to touch on this time, Steve, is the term audit. And so an audit is, and this is interesting because I think that some people in clubs don't necessarily understand the purpose of an audit. The purpose of an audit is not necessarily to make sure that you're making enough money or that your business is running fine. The audit itself is the examination of the club's financial records and the processes that you go through to keep those records, to ensure that the records are accurate and to ensure that the records and the organisation is compliant in meeting its financial reporting obligations. So it's not, an auditor doesn't necessarily pass judgment on how well you're performing. There are some audit reports that go into a bit more detail, but what you've got to understand is that the audit, and here we're talking about the audit as in your audited financial statements, recognizing that an audit can also mean when the ATO wants to come and do a deep dive into how well somebody or some business is reporting on their financial status to the ATO. This is the internal audit that the organisation is basically commissioning for itself. So you pay an auditor to come in and have a look at your financial record keeping processes. So it's making sure that the money that's coming in is showing in the right place, that there is adequate evidence to show where that money has come from, that the money that you're spending is being put in the right place, and that there are adequate records to provide evidence that that money has been spent in the right way. So that's what an audit is. It's not, as I said, it's not the auditor's job to say whether you're doing things right or wrong, but sometimes they will pick up on those sorts of things. And the benefit of having an audit is by the time we get to the AGM and the committee needs to stand in front of its members, to whom we are, remember, accountable, which means answerable, we can say, and by the way, this is not just our opinion. We have commissioned somebody who is at arm's, because an auditor needs to be at arm's length. They can't be connected in a material way to the club. We've had somebody who is arm's length have a look at how we're going, and they've said that we don't have any problems. Now, what you want is an unqualified audit. And by that, I don't mean that the auditor's not qualified. I mean that the auditor hasn't provided any qualification statements. And that's a bit difficult when it comes to some sports. It's going to get easier as we move more and more to a cashless society in our not-for-profit sector. But at the moment, it's a little difficult because there's so much cash that still floats around. There's typically a qualification that says, all we're doing here is looking at the records of the money. We're not looking at the money itself. So the money that's showing in the bank and that shows on bank statements, fine, I can see that. But I can't see the cash that was collected that may never have made it into the bank. And so this is a problem, when you drill into the nitty gritty of how deep financial management goes into a club. If we've got a cash drawer in the canteen and we're selling only healthy food and beverages to our customers, and there's cash in the canteen, and then the ref comes up to get paid and you pull cash out of the canteen and pay the ref without any without any paperwork that demonstrates what that is, then then that's where cash gets complicated. And that's why, from my perspective, I would much prefer to see clubs as cashless as possible. When we talk fraud and safeguards, we'll get into that in a future episode. We'll talk more about that. But just from a reporting perspective, so that there's clarity and therefore confidence for those people who are accountable for the financial reporting, it's kind of important that you don't do things like that. And that's what that qualification statement can often mean. And look, it's so common that it might not actually qualify as a qualification in the financial statement, in the audit report. But what you want is an audit report that isn't qualified by something like, look, the financials are fine, and the way that they've collected their money and reported on, the way they spend their money and reported on it is fine, but they can't pay their debts as and when they fall due. That's a pretty significant qualification. It's basically saying this organization is not solvent.
Yep.
And on the financial statements, it's actually the committee's job to sign a statement every year that says we declared that it is our opinion that we will be able to pay our debts as and when they fall due. What that means is that we are signing a statement on our financial statements for the auditor every year that says, yep, we are solvent.
Interestingly, to your point earlier, during committee meetings and the very common absence of questions posed to the treasurer, it fascinates me at AGMs how infrequently members ask questions of the treasurer or the board or committee in relation to the audit. And that statement is so important. The board or committee members signing off the audit itself, and declaring that it presents a true and accurate record and that we're solvent, is such an integral component of good not-for-profit organizational management that I think is all too often just glossed over and other things take precedence. And you've pointed yourself to examples in the past, even of AGMs of state level organizations where really stupid questions are being asked of the committee and nitpicking about certain line items. And I think we've even talked about this in previous episodes. The bigger question that really should be pointed to is, how are we solvent, and are there any big problems in our financial processes that, as you point to, is the focus of an audit that is, I don't think is often enough asked by members.
Yeah, and look, it's interesting, and I apologize. And look, it's probably as I get older and more wrinkly, and then reflect on the way that I've said things in the past. Maybe I shouldn't have said. So I still think there's no such thing as a stupid question, but it's the intent behind the question. And so the ones that you're talking about, I remember, as you were talking about, I just had a flashback to being in that AGM and thinking, shit, that was painful. Gee, I wish there was so many other things I could have been doing on that sunny Saturday.
Or that they could have been discussing.
Yeah,
for the
much more important than
benefit
that was
of the organisation or the
exactly. Sport. So it's fine to ask a lot of questions for clarity, but if the intent of those questions is to make the treasurer look stupid, then maybe put your hand up and do that job, because it can be trying at times, especially when you've got people who are just trying to undermine your work. And it's not, and the treasurer, by the way, is not accountable for any mistakes. The entire committee is accountable. So the treasurer might need to fix some things, and fine, if things come up and things need to be fixed, you can receive it but not adopt it. That's fine. It still needs to be done at the AGM, and then it might be fixed, and it might be presented later to be adopted once any clarifications are provided or new information is then dealt with. But it's the intent behind those questions. But I absolutely agree. Ask a lot of questions, and it's really weird. There was one year when I was at 2 consecutive AGMs, and this is in netball, and one year they'd lost, like, I think I might have mentioned this, they'd lost like hundreds of thousands of dollars. It was a big loss, and it was through investment and some pretty poor management, and some bad things happened. No questions, just adopted. Yep, thank you very much. Following year, they made a profit, and I think the profit from memory was $184,000. And all of a sudden, there's lots of questions. Like, they're saying, well, how can we get our hands on this money? But hang on a minute, we're just still recouping the loss from last year. And why are you still charging us fees when you've got $180,000 in the bank? Anyway.
In the context of the discussion that we're having about audits, I think it's important just quickly to flag that some organisations who turn over less or who own less in the way of assets might not be required to commission a full audit, but might be permitted to have a review or verification prepared by a chartered accountant, CPA, other suitably qualified person.
Or even internally if they're really small.
Or even internally where the president and or treasurer might sign a statement to the effect that these financial statements present a true and accurate record of our financial position. But even many of those organisations still get a full audit.
Yeah.
And who is it that's the first person that says they want a full audit?
The treasurer.
Treasurer.
Yeah. And good on them. They're saying, I want transparency here. I want that transparency to be transparent.
Yep.
Now that I can't put in a dictionary. Steve, as usual, it has been an absolute pleasure to talk with you about all good things Basket Case Clubby. But in this case, it's been even more pleasurable because we've got to talk about money. And I like talking about money, not because I'm Scrooge McDuck, but because I believe that clubs in Australia have an opportunity to be able to get their hands on more of it than they are. And as we talked about right at the very top, that all of that money that they make is always going to go back into doing what they do. So it's what I call the self-limiting factor of not-for-profitness. At some point, all of the money, because you can't share it with members as if they're shareholders receiving a dividend, at some point, all of that money is going to have to go back into doing more great things for your members and your community. Oh, this would be
well
nice.
said.
This would be a nice time to have the background music to fade in, the feel-good music like at the end of a 1980s sitcom. So, Steve, I'd like to thank you, of course, for joining me again, and to thank Jess, our wonderful producer and editor, for making us sound smarter and funnier than we probably are in real life. If you haven't already signed up for our newsletter at cprgroup.com.au, make sure you do that for some useful bits of information and tips and tricks that will go into a bit more detail on some of the topics that we talk about here. We've got some new webinar series coming up for 2024, so watch out for that one as it gets announced, and we'll obviously give you some heads up for those as they come up. It's probably one of those
as they come up.
Should have thought through before talking about live in a podcast. And follow us on social media. Make sure you leave. Please definitely leave reviews for us, because we absolutely like the ability that those reviews give us to reach a broader audience, more people who are looking for tips and tricks to help them run great clubs and make lots of money. Steve, I look forward to continuing this little journey down financial basket casey goodness in the future. Until then, see you later.
As do I. Happy New Year, and I look forward to talking again soon.
See you later. Basket Case Clubs acknowledges the traditional custodians of the country on which we record, being Yugambeh, Turrbal, Jagera and Kabi Kabi land. We recognise their enduring connection to land, waters and culture, and pay our respects to elders past, present and emerging, and extend that respect to First Nations listeners.